Alright guys, I don't usually start in my Discord, but I just wanted to quickly add in some notes here. What I've posted here, so if everybody just goes into quickly the beginner videos, what you'll be able to see is if you click right here, I've released an small little glimpse into the STA setup, etc. etc. Now, I've not posted any videos just because I've not taken any singular trades on my FTMO account. So it's more or less in break even. Still, you know, I've not traded it once. Now, this week, you're gonna get some great insight. And I've been waiting for good reason. So don't worry. Don't worry. I've been waiting for good reason because in today's call, alright, I also wanted to just quickly show you guys this because in today's call, I'm gonna give you guys a glimpse into one of my students' call. Just note that like this document, this video will also have some parts deleted, alright? More or less 90% of the video deleted, but this call contains pretty much how I trade my live account, my personal account, how I trade it. You'll see graphs of how I trade it. You'll pretty much even see my Obsidian notes, and of course also contain my risk management, how you specifically go in and change your risk management. So it's a real student call, more or less, and a real perception of the differences. So you can see some major differences in the things which, of course, in actually which actually happens, right? And the things we're actually planning on doing. So you're also gonna hear me my plan for next week because we are anticipating a great STA, like a real crazy probable STA next week. And so you're gonna also hear me talk about how I plan for it, aka buying some funded accounts, trading them, etc., etc. How I'm gonna trade them, how I'm gonna risk, etc., etc. Gonna learn all about it. So hope you guys really appreciate this. Anyways, just enjoy, guys. Alignment. All right, that's something you need to real think critically about when taking or before taking an STA. So let's now go into the weekly chart here. You can see we have taken out this right here. We actually did not take it today. We took it yesterday. You can see USD actually took its low today, completing its future prediction. So simple future prediction, guys. So simple future prediction. And of course, the DXY completed this because we have previously future predictions. That's just a real-time example of a future prediction from the yields to the DXY. Because if you look at it, well, we actually had already taken this pretty much on Monday. So Monday, and then pretty much we saw this, and then we saw this happening on Thursday, I think. And then, of course, we saw USD going and taking its future direction on the Friday. So it's like a day, a day, a day, if that makes sense. Now, next week, as I've talked about, we are looking for level. We're going to look at the level here later, just quickly going through it before just starting to talk about the real saucy things. But we're just watching this move happen, the second expansion. Why I think it's going to start the expansion is because, well, we're usually very, very quick with these expansions. You can go into the daily here, and we usually see something like this, just a quick little expansion or quick little manipulation taking, as you can see, some sell side liquidity here before just a big other expansion towards the upside. I think the expansion, of course, is going to be towards the downside. It's going to be real great. You can see we've consolidated here. We've engineered now equal highs, exactly like I've said. So if you go back to the previous calls, the morning calls, I've pretty much repeated myself in all calls. So it's fairly easy to just go to the nearest call and you can see, oh, I think we're gonna end with equal highs. And look, we have a high here and we have a high here. Now this high will become time-based liquidity. And if you think about it, I think on one singular day, we might have Monday consolidating or whatever. But I think then on the Tuesday, we're going to have one expansionary candle towards the upside. We're going to have just a wick. So that pretty much is going to be a wick. So it's going to be just a wick left here. So on the daily candle, it will pretty much open up. All right. It's going to just open up like this. Pretty much consolidate. We're going to just have some small shit like this. And then next thing is going to just open up. We're going to trade up higher. And it's going to close like this. So we're going to have the close down in here. If that makes sense. So something like this. Hopefully that makes sense at least. So that's pretty much what I'm looking for. You can see I've been waiting a long time for this STA, actually been real patient. So I think that's also benefited me because of course I don't like trading spooling programs. I could trade spooling programs now. I'm just waiting. I'm collecting that on this. So please also go in and collect that on this, by the way. Yeah, Tuesday, Monday, whatever, whatever. I could care less which day it happens, as long as we have seen some big displacement on the yields. Because we need to wait for the yields to expand. Then like the objective is completed, because then we have time-based liquidity, we are level, we're pretty much seeing the level getting traded into on USD and the DXY at the same time. But for all of this to happen, we need the yields to expand before it. Otherwise, it's not an STA. We can have all the confirmation in the world. We just need that. All right. So let's just dive right into a 50-minute time frame. We could skip the 4 hours. We could skip all of those things. So you can see we have engineered even more equal lows. This was why today's trade, if you are to take pretty much today's time-based liquidity, it would not have been an STA. You can see we did not take this. We call it the mediocre STA on USD. Personally, I would say it's necessary for the DXY to take its liquidity when you're looking for an upside potential move. So I'd say you could call more or less a USD move an STA, but not a good STA. Now, like I said, where is the equal highs then? Well, the equal highs is, if you look here, right here, the high, and you can look here. That's more or less exactly where it's equal highs. So if you go up here, you see more or less equal highs right up there. So I think it's going to be very, very good. We're going to just clear out all of this, and then we're going to dump towards the downside. It's just going to be an amazing move. It's going to be an amazing move. So that's pretty much what I'm looking for. You can see the engineered sell-side liquidity here starting to real looking crazy good. So you can just see it right now. So you can see it starting to form. So it's gonna be crazy, crazy, crazy good. And like I said, we are at a level up here. We're gonna look at it from a lower time frame chart perspective, or from the lower time frame chart perspective. Like I said, so don't get it mixed up with this. I'm talking about like changing the whole thing. So let's just go into the weekly here as well. So as we have been seeing, and by the way, let's just also go in here so you can see where the previous high was taken. So I can just show you the real-time example, so you don't need to do it yourself. Right, let's see where previous weekly high was located. Let's just quickly annotate it like this. And let's go into the daily here. And so you can see more or less we took down Thursday. So what pretty much we needed to do, you can see the previous weekly high being right here, right there at this given high from the Friday. You can see we took that given high, this given high right here. Which day was it? Well, it was Thursday, right? So we took that, swept. A lot of people were thinking this was going to be the STA. We're actually looking for something like this. And of course, it just traded up higher then, continued towards the upside, and of course, engineered equal lows here. Now, in USD, what you'll be able to see is that the given Thursday, given previous weekly low, as you can see here, we can just annotate it right here, previous weekly low, and it more or less got taken as seen today on Friday, while the previous weekly low got taken on the Thursday. So you can see Thursday, we pretty much swept the low. As seen, this low we pretty much took out on the DXY, right? On the Thursday. Now, as y'all know, that's not an SMT. A lot of people would see that as an SMT, like this as an SMT. Wait, let's see, this and this and this and this, because pretty much the euro did not take this. But we are looking past the ICT shit, and what we are seeing this as is more or less a future projection. So we're more or less looking for low prices. So this setup was pretty much one some people took as pretty much an mediocre STA. It's not good STA, but it's a mediocre STA. Now we're still looking for low prices, and so you can see we have pretty much engineered some sell side liquidity under here, looking fairly good. And so you can see the equalize under the XY, so we should just sweep out all of this and then just trade up higher. So that's pretty much the thing we're looking for. We're going to cover this more in detail at the in-depth analysis. But you could even call this equal high here, still left. As you can see, we have still buy side liquidity here. We more or less have buy side liquidity right here with these perfect equalize, and we have equalize up here. So it's looking very, very, very good. So that's like a real-time example of a future prediction. So looking at it daily here, you can see more or less mirrors this, right? So more or less mirrors this. We should start soon, at least, start to see sort of this move. We're gonna see an expansionary move towards upside. So you can see we're just here for a few days, and I think we're gonna just expand lower for a few days. So I think Tuesday next week, that's when we pretty much have been done. So if we start displacing of Tuesday, right here, started trading up, then we're gonna see the expansionary move. We're gonna see something like this. Gonna be very, very simple to trade, by the way. And that pretty much brings us to the conclusion of why I'm buying some funded accounts, because I'm doing more or less like, well, accumulation now. So I'm literally doing the thing which small money does, alright? Now, but like, that was a joke, by the way. But in a sense, I'm doing what the small money does. But of course, I don't have billions of dollars in capital, right? Um, but they're pretty much accumulating. I want to also want to accumulate, and then I just want to pretty much take this opportunity to just earn some money, right? So I think we're pretty much gonna do this, and I'm gonna cover pretty much what I've been focusing in on. Yeah, I can just show NQ pretty quickly as well. Yes, so let's just do that quickly. You can see NQ right here. I just need to take away the blue lines here. It looks so shit. But yeah, let's go into the data here. We don't need to pretty much do anything special. So let's go into the data here. So what you'll be able to see is more or less that, well, we are just looking for some upside potential here. We're just looking for price to continue up higher. Nothing special, right? As I think this is going to be a major low. And this is going to be a major low. So we have like a terminus here. You see, we've more or less cleared all of this. We could, of course, just jump one step, one time more lower here. We can also go into the 1 hour chart here. So don't worry, don't worry. But I think personally it's going to displace a little bit towards the upside here. We can go into 50 minutes. We can go into our 1 hour. Let's see. So you can see we more or less have this, right? This low, this low. Perfect equal lows. And you can also see this. So I would say us pretty much trading towards the downside, trading towards the downside, potentially taking all of this and forming a terminus here, trading towards the upside. Very, very simple. I would say personally we are to deliver up higher a little bit now, and then dumping because we need to engineer some buy side liquidity here. But then after we have seen all of those equal lows getting taken out, we should just see a pump. Yeah, that's like my thought process. See, that's why I don't. That's why like it helps you not getting FOMO because you're literally doing what the money is doing. Like it's exactly what the money is doing. So you can see accumulation here. Well, I'm accumulating. I accumulate here, by the way. So that's also what's nice with STAs, or at least what I think is good with STAs. It's just simply because, well, it's fairly easy to just know what you're looking for because you have everything pre-designated. Like if the market does not follow your um, planning, well, you don't trade anything, so you don't lose anything, right? And you just wait for the next planning periods, right? Um, and of course, when the market is accumulating, you're then to accumulate because you have the potential for accumulation, right? You have time to accumulate, right? So that's fairly smart. But that's just due to that. I think I'm gonna skip trading a little bit with FundedX. I'm gonna of course continue trading with them. But you know, it's just good to also diversify a little bit more than just having two prop firms. So I'm going for Aqua. I think it's Aqua Funded or something, Aqua Funding or something like that. So I just bought a few. Uh, I think at 300k or something like that. It's very very good price as well. It's real cheap. And I just gone for two step and just normal. I think it's. I don't want to promote any prop firms, by the way. If I were to like go and promote a prop firm, um, I was pretty much. I'm gonna say FTMO. All right, so go for FTMO even though it's expensive. Go for FTMO max allocation and then go for any other prop firms. That's pretty much what I've done. I think that's best. I think 100k is 400, $300 between there. I don't know. 400, $300. It's very, very cheap. But we're gonna cover the risk management I'm gonna do on all of these until pretty much I've max allocation, quick max allocation. Like I said yesterday as well, I don't really trust any other funded accounts, prop firms other than FTMO more or less. And of course, you can never trust any because you're gonna just focus on your live account. But until you have like a big, I would say, a bit the size you want on your live account, it's always good to accumulate some prop firms. And it's is always good to have prop firms, right? So like even if you have like multiple realistic live accounts, right? It's always, why not pretty much take the opportunity while prop firms exist? Because of course, in a few years, probably they will not exist. So like, why not accumulate as much money as you could using these scammy prop firms, I guess. And then of course, when the time is in, well, you have the good amount of money, right? So you can just pretty much continue trading live, and of course you have that money invested, and you have pretty much those things. So you can live the good life now, and of course the good life later. I don't think they will go away. No, you're correct, but I think, with years it becomes harder and harder to trade prop firms. Do you have to do KYC for aqua funding? Yes, you have. I think you have to do KYC for all prop firms. I think it's very, very similar. I've never been funded with aqua funding, by the way, so I'm not even in the KYC process. I just bought the accounts. I've not taken a singular trade. It's like futures, futures account. I've not taken a singular trade. Exactly. They will just become harder, right? So it becomes like, okay. So let's just bring you guys back to the good old days where we just had my forex funds and FTMO. All right. So back then, all right, we more or less had them two, and we had some other proffers. But of course, I just traded my forex funds. I just love them. It was very, very, very easy. All right, it was very, very easy to trade. Right, you were always guaranteed to get a payout. The conditions still was very, very shit um, back in those days, but you were guaranteed to get a payout, and it was fairly easy. You could trade in news, you could do whatever, right? They could care less. You could risk how much you wanted. Now there is just a lot of what is MFF? Oh yeah, it got cooked, bro. Yes, my forex funds got cooked. Um, bro, lost so much money on my forex funds. Anyways, so what is it called? Um, yeah, it was so simple to trade. Now prop firms literally, and now talking back in the MFF days, right? They had no news rules when you were live as well. So like, you did not have any particular rules, any consistency rules. Now what prop firms are coming back with, right, is more or less as multiple more people start passing funded accounts. I think it's just due to that they have unlimited days now, so they don't have any time limits, right? They're just pretty much unlimited. A lot of people are just passing the funded accounts and making money, and so the business model has become less profitable, making some of the firms introducing like some shitty ass rules, which very, very bad. And of course, trading live account, it feels like always a relief because you don't need to think of anything. You can just think of a stop loss, and you can think of a take profit. While the other prop firms, like, let's take FundedX, right? Bro, I cannot really trade on days where I see STAs, because then we have unemployment claims, and all freaking red folder news is uh like on Euro red folder news, and of course on the DXY, and even some of my accounts now have pretty much gotten restricted, whereas I cannot even trade more than 1% risk, right? So I've like risk restricted. I think it's just because I got the payout. So yeah, I think it's just because I got 3 more payouts. I think they don't like it. So I don't know. Futures prop firms, bro. I'm gonna try it out. So I've pretty much never tried out futures prop firms. Bro, consistency rule is so shit. 100% agree, bro. 100% agree. So consistency rules is so shit. Anyways, but I think it's good to use it. Like I said, it's very, very good to use it while they pretty much are here. But you should never think of it as a long-term game, right? But FTMO, very, very good. If you have not been funded with FTMO, go for them first. Accumulate pretty much, because there you can take your time. All right, FTMO is most legit. I would say they're gonna be here for the longest, because of course I'm still thinking of it as short term, right? So go for FTMO, go for max allocation if you have the money, or of course if you're starting to scale, well, start to scale with FTMO at least. Once you have gotten a few payouts, then go for those more risky prop firms, because I promise you guys, I also have done the mistakes. Well, I got for where I've gone for, what is it called, um like prop firms, and pretty much when I've gone to payout, they have not pretty much wanted to pay me out, so it's very, very sad. Oh, that's perfect. That's perfect. So you can go for fibers. You can go for whatever you like. All right, just try to accumulate money, I would say. Oh, we're gonna start with obsidian. I'm sorry, it's done. So probably everybody will be able to see this. This is pretty much the prop firm scaling plan. I've shown this multiple times. It's just a whole lot of things. But of course, this is what I've now more or less started with. But of course, I'm learning future still, so I'm not gonna, you know, it's gonna be it's gonna be good in the future. But hopefully, everybody can see this, by the way, as well. So everybody able to see what I'm sharing. Just write yes or no, so I can just see. Perfect, perfect, guys. Perfect, guys. So like I said, more or less what I'm targeting is, of course, max allocation with FTMO. Now, this pretty much, we'll see about Funded X. We'll see what about Funded X. Of course, FTMO going pretty good, pretty good. I'm more or less break even on all the accounts now. But FTMO going pretty good. And of course, just the secondary focus is, of course, on these smaller prop firms. Now on the bigger ones, right? I'm trying to overall focus in on getting max allocation and focusing on getting multiple payouts. And on these proffers, more or less, I would go for, you could go for big payouts like I've talked about, whatever. But on the smaller ones, on the smaller more or less prop firms, like I've specifically mentioned, please go for small payouts. You can go for immediate payouts. You can go for whatever. I've never tried any of these, but what I would go for is more or less um four, like on 100k, go for like 4k payouts. I think that the 4% payouts, but don't go over like 6-8% payouts each time. Personally, that's just so you can minimize them catching on to you actually being very, very profitable. Um, because simply you get worse conditions, and then of course you'll be unable to trade it. Give me the funded accounts to me if you're not gonna use them. I'm gonna use them, so don't worry, don't worry. Do you know anything about Quanticle? Ah, yeah, don't use Quanticle, bro. Don't use Quanticle. It has consistency rules and very, very shitty rules. Also, don't use Alpha Capital, so don't use this. So I'm gonna delete this. These are the smaller ones you could use. This is actually different, so they actually rebranded. So I'm gonna just take away this here. So you're left with these three, which you can go for more or less. Fundex you can also go for, of course, but I'm still trading this, but it's very rarely that I actually, am able to take a trade because, of course, they have some news rule. FTMO, of course, have some news rules. Um, I actually thought it was already for the news, but of course not. But I'm just having FTMO here and FunderX here just because I would say they're still very, very reliable. FunderX I would also say is very, very reliable. However, the rules is pretty shit. The prop firms, they pay out, etc., etc. Just note, you can go and check the payouts. See my payouts right there in FunderX server. FTMO is also very, very, very good. However, I would say FTMO is just a better one. All right, they have much less much less rules. Even though they're the expensive one, if you are trading legit, if you are not pretty much over risking, if you want to pass and you want to accumulate funded accounts, then go for FTMO first, then go for these smaller ones. All right, and of course now we're starting with futures here as well. But this is gonna take a while for me to build up. But on all of these accounts, pretty much like I said, this is my primary focus. Um, I'm pretty much risking in evaluation phases 2% on each account. Of course, that's just me. They're gotta be different for each and every one of you guys. Pretty much some of the accounts, of course, if you have some uh, like risk rules, risk criteria need to follow, just follow those risk criteriums. On FTMO accounts, evaluations, etc., etc., I risk 1%. Fundex, I risk 2. I could care less because I don't risk more than 1% when I'm in live. So all my pretty much live accounts now is a 1% rule. All right. So yes, I've risked more than 1%. Don't worry, I'm not risking more than 1% on live accounts, live funded accounts. So it's not the same as live accounts. But on these accounts, well, on Aqua funded accounts, I'm gonna risk 2%. I could care less. It's very, very simple. And of course, on all of these, I have some accounts here, and I have pretty much one account here. On these accounts, pretty much I risk 2% on each. Now I've bought up 300k here, so 300k. I'm working on. Of course, this is not passed. I have some accounts here, and of course, all of this is passed. So what's it called? Um, allocation, total allocation. Not total allocation. I'm sorry. Total allocation now is 1 mil. All right. Okay, that's crazy actually. So I can actually go for 1 million, but I won't. So I'm gonna just keep the 400 trade until I lose them, I guess, and risk 1%. Let's see. I don't think I'm gonna lose it, but I'm gonna trade it till the profit is gone at least. So that's more or less what I tried. Um, that's so simple, bro. That's so simple. Get consistent 2%. That's so good. That's so good, Tristan FX. Not gonna lie, best thing ever. Or just go for 2% payouts, I would say, and then go trade another. That's like what I started doing in the beginning, and it worked beautifully. All right, it's the best thing possible. Best thing possible. Now the risk I've presented, and of course the things I'm going for. So I'm going for little bit bigger payouts here. I could go check them out, and I'm going for just a little bit smaller on these prop firms here. Don't know about aqua funding. I don't know. Maybe I can go for bigger ones. Maybe just one big. I don't know. But of course, go for 2% payouts, and I think it's very good because then you're not gonna be like red lined by an prop firm, which of course your ultimate goal is to pretty much stay at that prop firm, be able to trade at that prop firm for the longest time, so you can make the most money out of that prop firm as possible. All right. Like pretty much how I'm calculating the amount of risk I'm using. So if I all to just go quickly here, we can more or less put in some initial balance. It does not really mean because we're looking at percentage value here. We're pretty much finding out the amount of risk you should be using. So let's say, let's use mine 67 break even. Um, oh, I think let's see, break even is calculated. I'm gonna just quickly look this up by the way. So let's just see here. Um, Yeah, so let's do this to 60%. Let's do this. I think you could go into my. I think you're already going to stats. So go into the stats channel, and there you can pretty much see it. If you go into midterm price calls, if you go into how to create your model, we have got or data. I think it's called data. So go into that. Very good. Very good. Um, and then we more or less gonna take break even rate. Gonna more or less do this, and we're gonna just take. Oh, okay, so it's calculating it. So 70% more or less. You can see more or less 70% would rate. But then just take number of average trades per month, and let's just take 48 months. Average risk to reward. That's 5. Um, so let's go through for this. I think that's correct. Yes, so let's go for this. So now we're going for the worst thing here. So we're pretty much looking at it minus 4.3, and that is of course maximum possible drawdown, meaning I could possibly trade with 0.5 and it's gonna work out totally fine, right? Now let's up this to 1%. All right, let's just up this to 1%. So if I were to trade with 0.5% risk, like if I were to trade with 0.5% risk on, let's say my live account, my maximum on possibly worst, I think this is a month or possibly worst day. I don't know, but possibly worst. Is it maximum drawdown? But is it maximum drawdown in a day? No, it's per month. All right, so this is the worst possible drawdown I could be in, which is fairly reliable actually. Fairly reliable this. So this is the worst possible drawdown I could be in for a month, which is very rare. All right, which is what you're looking for. So you should not go to most possible. You should not go to the best. You should go to the worst always. You should always be on the worst and look at the max drawdown your system could incur. Now, what does this mean? It means, well, I'm fine because I pretty much on funded accounts more or less I couldn't then risk more than 0.5% because the maximum risk or the maximum loss you could have is more or less 10%. Like 10% drawdown, I think that's also good. And I think the risk you're gonna use on evaluations, possibly if you are more risk averse, you can more or less risk that on your like live personal account as well. But I would not recommend risking more than like 3% because it becomes very boring being like and then let's say 3 trades in a row. Possibly, you have to think reasonably, right? So it's gonna be very like lame to be in 9% drawdown. So personally, I'm risking. Of course, it depends on the setup, but between 1 and 1.5 percentage. We'll see. This trade potentially 2% on personal account. This we're waiting for because I think it's highly probable. It's something I've been waiting for multiple weeks, planning, etc., etc. So I think it's gonna be very good. For of course the aqua accounts, the prop firms, right? I'm risking more or less 2%, and of course for the FTMO live accounts and evaluation, I'm risking 1%, if that makes sense. All right, a little bit less maybe on live, we'll see. But now we can go up to 1% risk, and we're gonna look at the worst possible thing. Is this valid? This is for a month. Yes, it is valid. All right. Why is it valid? Because the maximum risk occurred could be more or less like in a worst possible month, uh, could be more or less minus 4.9 percentages with these sort of stats. So is this still possible to risk? Then if I'm following just my model, following everything, yes, this is possibly what I could um, risk and be very verified with in a month, because you know the on some prop firms, most prop firms is minus 10%. So if you incur more than 10% drawdown, well, it's more or less fine. If your system is, however, higher than 10% here, or higher than, I would say, 8% here, because let's be realistic, right? It's going to be a little bit, maybe even worse than worst in a realistic situation, because potentially you're just an emotional trader. Potentially you're thinking, oh, like maybe I more or less, what's it called? Um, yeah, maybe you just don't follow your rules a day and then you lose 1 extra percent. So maybe have it like at 8% here. So if it goes over the 8%, well, then you need to lower your risk. And you measure the low risk, because then you're pretty much comparing it. So let's say 1% here. Let's switch it up to 1.5%. This is how I optimize risk. Now you can see 1.5%. This is more or less something I could risk on my personal account. You can see my personal account would be fine, but if I were to risk this on an funded account, this would not be good. So I cannot go over 1.5% risk trading the STA uh, in a normalistic situation, all right? Because the worst possible month I could incur is minus 11%, which then would have blown the account. Now, in evaluations and such, it does not really matter, because of course you can blow it and buy a new one. Does not matter when you have the money, right? But of course, if you don't have the money, I would not go above then 1.5% risk, and then I would drop the risk. So let's say 1% risk. Let's go back to 1% risk. Yes, like I said, this is fine, at least for me, right? And of course, you should have it like at 8%. So this is how you optimize risk for example, for live personal account. And I would not go over 8% loss in a month, right? So let's say I could potentially use this. So let's just optimize it. Yeah, minus 4.7. Let's go to 1.3. Let's go for 1.3 here. Yes, so I will not go over this. So 1.3 is my max risk, more or less, on my personal account in an optimized way. You could of course also go to like something like this. Oh, okay, this is not valid, but this is more or less the optimized risk personally for my live account, like 6.6, because I would not go over minus 8, right? Now of course on my live account I could risk 1.5 even, but it's fine on my personal account. And of course evaluations live account, which you want to, like, of course, let's say you're going for like FTMO, you're going for like the quantitative role on FTMO, which of course is like one of my goals here. Like actually one of my goals. Well, I would not like to risk more than at least 0.5%, because of course you're trying to get like never being in any sort of big ass drawdown, any more than 2%, I would say. Um, because I think there's some rules accordance, but I don't know. But then I would not go for like bigger than, let's say, 2% drawdown. How do you optimize that? Well, you're looking at just minus 2%. Let's see. Oh, okay, a little bit less risk. So let's see. Yes, here we go. So potentially 0.25, 0.3, somewhere in between there. That's like the optimized risk. Of course, I'm risking a little bit more. Like I said, I'm risking like 1.5, potentially to 1%. Depends on the setup as well. So of course, it's going to be a little bit different. But this is totally fine. I think this is the best optimized risk, 0.5. In accordance, you could also have 1%. You can see 1%, 1.5 makes like 1.9% difference. You can compare those two means, etc., as well, to find out. So it's very, very, very good, very, very good. So 2% per risk on a trade. First one to make 4% or 8%. What do you think? It depends on like what are you trading. Are you trading your personal account? Is your personal account small? Are you risk aware? Like, can you manage the risk, or do you become emotional? There's multiple questions you could ask yourself to find an. So 2% to trade, first one to make. No, I would not recommend it. If you pretty much don't have the cash, because of course maybe you don't have the same stats as I have, because I've optimized my model for like 3-4 years now. Uh, but I would say don't definitely have. Oh, okay. Maybe then. Yes, maybe. If you want to, if you want to pass your account quickly and you want to accumulate a lot of funded accounts, and of course then also accumulate a lot of payouts, just accumulate a lot of money, and you have the monetary, right, monetary funds to be able to do so. Yes, do so. Yes, 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 it's worth it, because the only way you're making lots of money, which of course I need everyone to realize, trading prop firms is not the same thing as trading a personal account. Trading profits is a whole other game. You're winning by spending money, because the more money you're spending, or the more money you have, the pretty much higher and quicker you'll be able to have the funded capital. All right, because the more you'll be able to risk on account, because then you're not, there's multiple things in accordance, and then of course you can go for the big payouts. So that's like, but I don't know if you should have that as a goal. I don't know. It depends on where you're at. If you're like super super profitable, go for it, bro. Go for it, because you should know yourself as a person as well. So I would not recommend you just going in like, oh, doing it like quickly. But like, um, I would focus on like, oh, actually becoming better as well. So not just passing funded accounts as well. So there's multiple different ones, but just ask yourself, Eric 10, if your overall, if that's correct, like in accordance, all right? So if you think that's correct, I cannot tell you otherwise, because of course we all have personal differences, right? No worries, QCY. I'll see you, bro. I'll see you, bro. Um, but yeah, like I said, if it's correct. So I cannot tell you anything. For me, I would say maybe go for just 1% risk. Like, potentially, like 1% risk is good if it's FTMO, because of course at the end of the day you want to accumulate that, right? So then go for like a 200k instead. So spend the money on like a big funded account and go slow with it, because it's worth it, right? And then of course after you pass that one, then maybe do it, because then you have a 200k. But instead of going for like these smaller accounts, spending lots of money and trading higher risk, go for like big accounts, but have less risk. And of course if you know you're profitable, what do you have? Because what do you have to lose realistically of going for a big funded account, etc, etc. Now I don't blame you if you go for like 50k's, but I would not go funded accounts under 50k's. Like 10k's I would say is unnecessary for prop firms. You don't need to go for 10k's. Instead, save money and go for the bigger ones. Go for 50k's and above. 50k's I love. All right, it's very very good. Love 50k counts. But I would go for FTMO. I would simply go for 200k's. We want to accumulate the money. Don't think of the money. Think of the percentage. So like, don't even look at it, because it's demo at the end of the day. So what do you have to fear? Like, the prop firm does not lose anything, but of course they want you to lose. So you have to think of like the prop firm as your enemy. So don't care about it. It's not any money. The prop firm does not feel sad for you if you lose, right? So why do you have to feel sad for them if you take some money from them? Anyways, I think that was pretty much it. I covered a lot of things. I covered like risk management and such. Hopefully you guys really appreciated this call. Like I said, it would be quick, but hopefully you guys really appreciate it, and now also know why I'm accumulating some funded accounts now again, because of course every time I'm accumulating some funded accounts, it's gonna be amazing. So it's gonna be amazing, guys. Anyways, guys, be ready for next week. I've pretty much planned it for a couple of weeks now. Probably gonna be amazing. Probably is gonna be amazing, guys. So I'll see you all pretty much tomorrow, I guess, for an in-depth analysis, or an in-depth analysis of the markets. I'll see you all, and bye, guys. All right, bye, guys.